Good morning, everybody. Welcome to the Flow Show, Monday, the 3rd of November. And off we go again, sticking our noses into markets. Hopefully, making a few pips along the way. Morning, Kate.
Morning, Ryan. How are you doing, mate? You had a good weekend?
Yeah, all good, mate. All good. Bit of a busy one, but nice one nonetheless. So, hope yours was all right as
How
well.
was your concert?
Yeah, it's pretty good. Yeah, finished about 4 in the morning. So,
Oh, wow.
not the concert, me drinking.
Yeah, I guess that.
So and then a nice 5 mile walk with the family on Saturday. So that went down like a lead balloon. And your weekend all right?
Yeah, relatively quiet, mate. Bit of the opposite, be the quiet one.
Yeah, I'm definitely have a quiet one this weekend. Gonna need all week to recover. Anyway, let's get cracking. Going to start with a bit of data first, and if I get on the right page, going over to China, which been PMI day pretty much all the way through. We had some data last week. We had I keep calling it, they haven't changed the name of this yet. It's not the Kaijing, it's now the Rocket Dog or something, PMI, whatever it's called now. But anyway, that went a little bit backwards, worse than expected, 50.6. In manufacturing. A bit of bad news for old Switzerland. CPI came in at minus 0.3% on the month and down at 0.1% year on year, which will be ramping up pressure on the SMB to maybe look at taking rates negative, something they keep telling us is in the toolbox. Doesn't mean they are going to want to use it though, and they're seemingly reluctant to do so, or data continuing like that, and they may be forced to make that decision. Their core year-on-year measure also came in softer at 0.5% from 0.7% expected and previously. Kay, can they avoid taking rates negative?
They can, based on growth, which was slightly higher. They could avoid going negative. Do you know what? Maybe the exchange rate may help them if it's weakening just slightly from where they are. Maybe the Swiss corporates will be a bit happier. So in that sense, they can avoid. We still have a month to go. More over a month, right? But yeah, as they're only meeting once a quarter, they may. Depending on where we are, then I think in the Swiss franc, they may that may take them over the edge if Swiss franc starts to strengthen again. But for the time being, we have seemed to have found a bit of a top in the Swiss franc, which is better news for them as well, which may be doing a little bit of their work. So that can hold them back from going into negative. But yeah, based on the CPI, they they do seem a
In a
bit
fine
trapped,
line.
right? Hmm?
Yeah, walking a very fine line at the moment.
Yeah, very fine.
Yeah. Right, moving on to the other PMIs. Spain came out with their manufacturing. This is the first number, which showed a decent improvement to 52.1 from the prior 51.5. Even the Swiss PMI showed a little bit of an improvement there, but still in contraction. Italy, that was the first number there, coming in a positive 49.9, just below that expansion level. France, final number, improving over the 48.3 flash number and coming in at 48.8. Germany, they all stayed unchanged at 49.6, which was just a small pip up over the September number. Eurozone overall stayed unchanged at 50 in the final number. UK number there improved a pip over the flash reading, 49.7. Oh, was expected to drop to 49.6. It stayed at 49.7. So that was all pretty good, although some of the details within that don't make good reading. It looks like there was a bit of a temporary boost to activity there, working through backlogs and the Jaguar Land Rover thing that went on. I won't bore you with the details, but that may have caused a temporary boost. So things might not last there in the UK. Moving on to the ECB bods, floodgates open obviously after last week's meeting. ECB's Villeroy says we're in a good place, but not a fixed one. Must keep full optionality on policy. It says French inflation is very much under control. We'll see how that works out. ECB's Nagel says we will review the debt projections and keep our options open. The data hasn't fundamentally changed since September. ECB Simca says inflation to only shift marginally around target. We'll have more insight on inflation in December. ECB's Casimir, no time or need to fine tune or over engineer monetary policy. And we shouldn't read too much into small deviations from the desired inflation path. We've got the BOE this week, and it's a monetary policy report, so updated forecasts and a presser. But apparently they're changing things around thanks to Mr. Bernanke and his review of how they do things. Mr. Brown has told us that they're taking out the forecast and put them into a separate document. Don't ask me why. The MPR monetary policy report is supposed to be exactly those. But they're now having each committee member is going to write a paragraph explaining how they arrived at their view. Now, as we already get their rates view in the minutes, I'm assuming this is going to be their view of forecasts and how things are moving forward. So, yet more waffle from the people at the bank over why they came to those decisions. We'll see how much of a mess that is when it gets dropped on us, say, on Thursday. I haven't got my calendar sorted. Coming back to last week, where are we? We're in November. Let me get the right dates. What are we? Third Friday. There we go. Not that there was a lot anyway. We got Canada GDP data.
You're a week. You're a week.
I'm on the wrong week, am I? Where am I going? There, right there, and there. There we go. Let's try that one. Oof, it's a Monday after all. Canada GDP data coming in a bit of a weak one, which was not good news straight after the Bank of Canada meeting. So they'll be keeping an eye on that if that continues to head lower. We obviously got Fed wafflers out in force as well, and a few splits coming into among the Fed heads, though it's important who's voters and who's not. Fed Schmid said that it dissented against a rate cut because of the continued momentum in the economy, concerns about continued high and potentially spreading inflation. Fed's Logan, she's a voter next year, says would have preferred to hold rates steady this week. Says I would find it difficult to cut rates again in December. Says the Fed has already mitigated the employment risk with the September cut. Fed's Bostic says he eventually got behind the cut this week and he supported it because he still feels we're in restrictive territory. We have to see more progress before he's comfortable getting rates to neutral. So a potential holder moving forward. Fed's Hamak, again, voter next year, says would not have cut rates. Says that we are challenged on both sides of the mandate. We're now around the estimate of neutral and barely restrictive. Again, says the set cut was because of a sharp drop in payrolls. Says we are missing on the inflation side more than on the labour market side. Fed's Mirren, no change to that view. Says another cut is possible in debt. Restrictive policy makes the economy more brittle to shocks. Okay, so we've got a few more splitters, shall we say, than what appeared, among the voters. Doesn't really matter until next year, but it does show that emphasises that December might not be a foregone conclusion, as Powell said.
Yeah, that's one thing now, and you're right to point out who's going to vote next year, because assuming, let's assume that the shutdown gets sorted out and that we are going to see some data. If data on the jobs front don't fall out of bed, we're adding a couple of hooks for next year, right? the thing is, and I've been talking about that on the flow shows. Obviously, Powell didn't shut the door, but it's clear that he's himself on the I need to see more side, right? So he's rather on the post side now, and there's others coming on board who are expressing the same kind of feeling. So yeah, it could be an interesting one going into year end. Yeah, we could see a few more splits. Obviously, Miran, not even need to talk about him, but then also Waller, he's going to be on the side of a cut in December as well. Um, yeah, it's going to be a difficult call, and this I tend to agree with some stuff that I also read that by not giving the market what it wanted, that is to pencil in the December cut. They give themselves some, people call it optionality to move both sides of the spectrum, right? So that's maybe Powell not giving everything, and the others have different opinions, of course, but or different reasons why they would vote for a hold or even worse, if inflation remains very sticky. Um, because we don't know what's going to happen still on the repo side of things, and I think really Powell was maybe not giving the market everything, and right now, because if they need to step in, we know that they're going to end QT in December, but okay, the Fed has tools to they can just start to buy notes, right? And notes or bills, they can just start if they find that they need to give more liquidity in the system. But yeah, they're giving themselves some optionality. Although the hawks, the real hawks, like the hammock, who's coming on board next year, who has Logan, who is coming on board next year, they're probably going to be looking mainly at the inflation side of things. So
Yeah,
yeah, it's going to be a bit of a toss the coin, unless we see more stress in the lending market, that financial conditions are tightening in between, so that the Fed, without those new members, new voters, let's say, or re-voters, or new voters in 2026, that they have to step in the market earlier, of course, and then we are going to see again a different picture. But for the time being, at least, yeah, this pricing out some too dovish pricing for the December meeting already.
yeah, and there's obviously that December meeting is going to be big because we could know who the Fed chair is going to be by that time.
Oh yeah.
But I've been looking at stuff. I mean, the data this week is going to be super important because we're not getting any government data. So that's the between
Mm,
now and the December meeting. That's two inflation reports they'll miss out on if we're still in shutdown, and even if we're not, it's probably going to take them forever to catch up. So that mess could still be going on. We still might not get a clear jobs picture. And with this shutdown rolling on, I think it might be a bit early to see any massive changes to the economy. But I think we could start to see the first wobblings, shall we say, this week in some of the data. The ISMs are out. Both those PMIs are this week. Jolts. We've got ADP with their new weekly report on a Tuesday, and then their normal monthly on Wednesday. Challenger layoffs, I think that's going to be a potentially big one. We've already, heard some big cuts: 48,000 UPS, 14,000 Amazon. It's the ones we haven't
mm,
heard about that could boost that up. So I think there could be a risk that we see some negative data
mm.
this week on the jobs front that's going to flip around this dollar strength and get the market going dovish again. I think
I,
that's
I I tend to agree, Ryan, especially um, that we have all those PMIs. That's the thing, which I wonder is when exactly you have those PMIs been taken? When have the people been asked to do that? Because I mean, there's always this uncertainty surrounding tariffs. Yes, tariffs. No. Will it have an impact on the on the managers indices? Because and I would even say don't dismiss the manufacturing now in the US because they want to bring stuff home. But if they don't, if they would show a bit of a weaker picture, it could have a pretty significant impact on the dollar. I agree.
Yeah, I mean, I reckon. Well, probably for what the last 3-4 months, pretty much every comment has been about tariffs. I think it's going to remain about tariffs. I think it's going to remain about trade, but I reckon we'll be hearing a few more people, a few more firms citing the shutdown now as having an impact, and that is only going to grow over the months ahead.
Yeah.
Yeah, usually those reports are taken usually the middle 2 weeks, second and third weeks of the month. So yeah,
Could be.
I think we're in the window now where the longer the shutdown goes on, the more impact we're going to be seeing,
Yeah.
and we could see something happening this week.
Yeah.
But,
Yeah, and if we see more of those job cuts, I think what you were away when Besson said that he thinks AI will create a lot of jobs, and in the first quarter of 2026 there will be a huge job creation. I think that statement is going to be put to the test over the next few data prints. It's going
yeah,
to be really put to the test.
yeah. The only way I can see AI boosting jobs is paying people to actually get AI in programmed and working properly, and then after that they all get sacked again because you won't need them anymore.
Mm.
So I think, yeah,
No, I doubt
given
very much.
someone who's looking at AI at the moment, it's taking me a lot of work to do what AI should be doing and checking and double checking it. So yeah, there's probably going to be more people than that needed, and then they'll all get fired after. Hopefully, I won't get fired after. But anyway, right, let's move on to Mr. Trump. He says he will not start renegotiations with Canada. They're still in his bad books. He says he likes Carney a lot, but what Canada did was wrong. He says the China deal is going to be long lasting. Well, how long's a piece of string? Over in the oil space, OPEC Plus agreed to pause the output hikes for January through March after agreeing to another one in December of 137,000 barrels per day. So the market got its deck increased, but they look to be on pause thereafter. Right, let's have a look what's coming up this week. As mentioned, we've had all the PMIs out of Europe. We've got the ISM today. So that's the manufacturing number. We'll be keeping a close eye on employment and prices because that's the only sort of data we're getting on that front. Tomorrow or overnight, we get the RBA, largely expected to stay unchanged. And given that inflation reading last week, Kay, doesn't look like they're going to be doing anything this month.
No, Bullock will have a ball being being a hawk because she was pretty strong in her wording, saying that anything stronger would be missing the target. So yeah, there's no cut coming there. To to buy Aussie on the back of it, I would not right now because there's a bit of that tightness in the dollar market creeping in, which could just keep the dollar bid right now until it flips around. Um, yeah, so she's just going to be hawkish, but then it's that known, right? It's known in the market that she's going to be hawkish because she was so last week as well. So yeah, shouldn't be a surprise. Really, should be a bit of a shoe in that RBA meeting.
Yeah, and if the US dollar remains strong, you get a rally in Aussie dollar. It's probably going to get hit
Yeah,
fairly hard. So if you're
big
up and around
level that
for that
kept
one,
last week. Huh?
yeah, if you get a 40-50 pop in that on an unchanged
Yeah,
announcement, might be something to look at.
yeah.
Right, other than that, we get Jolt on Tuesday as well. Again, just giving us a bit of an insight into the labour market, although that is a month behind everything else. Then we get some Kiwi jobs data as well. Wednesday, we start getting the final services PMIs from around the grounds. So keep an eye on all that data. Again, it all comes through to the ISM services later on Wednesday as well. And as mentioned, we get the ADP on Wednesday. I don't know how long it's going to take them to put that ADP number in on the Tuesday that they're getting. I don't really know how it's going to play into the monthly number. So there could be some messing around with that. But ADP will be the important one for lack of the NFP this week on Jobs Week.
Were you there where when ADP said that they would start to produce it on a bi-weekly basis?
Yeah,
Preliminary.
14,250 was the number last week.
Okay.
So yeah, I did read the report, and they're all, I don't know what they're doing with it. I don't know how it all reflects into the monthly one. Will that weekly one beat the monthly one? I don't know. We'll have to wait and see what the.
We need to keep an eye on it because Powell told us that they're looking at it as well. So that we have to look at what they are looking at in a way, right?
Yeah. And it is the only jobs picture or jobs number we're getting of that sort of thing that supposedly runs along what the BLS do. Anyway, right, moving on. Thursday. Oh no, I need to jump back a bit. So we've got the RBA on Wednesday. We also have the Riksbank. So if you're trading Swedish, then you need to keep an eye on that. On Thursday, we get Norges, Banxico, and the Bank of England. Bank of England could be a bit of a messy one as well because of the vote split. I think the market is pretty much looking for a 6-3, but I've got a feeling it might be a bit tighter.
Oh yeah,
on that. Yeah, go on, mate.
No, I was agreeing with you. Oh yeah,
Oh, okay.
This is going to be a lot tighter, I think.
Yeah, I think very much so, and we'll see how those forecasts turn out as well. They may, even though they won't admit it, they may look to stay on pause for a bit just to see what the Chancellor gets up to at the budget. As I say, not that they'll tell us that, but it'll be in their thinking. Nevertheless, there's that Challenger layoffs that will come right bang in the middle of all the BOE stuff. So just keep an eye on that. I think there's a big risk that that's going to be a hefty one. If it is, some of this other data we won't be getting. I'll check some of these to see if any of this is private released rather than government released. On to Friday. Well, no, sorry. We get Norges as well. I nearly forgot them. And Banxico. Did I mention them? Norges and Banxico on Thursday?
Yeah. Well, yeah, you mentioned them. Yeah, Norges should be on hold. Banxico expected to cut quarter percent again.
Yeah, so that'll take them down a bit more. And on Friday, it's Canada jobs. We won't be getting the NFP, but we do get that Michigan number. That's the Michigan Consumer Sentiment number there. So our jobs data on Friday is going to be all about Canada. And if see whether they have a wobbly one, that will pile more pressure on further rate cuts from the BOC. And that's it on the data front. You got anything else, Kay, you keeping an eye on?
No, I think we covered all of it, and as you say, I mean PMI is important. Those challenger maybe jobs even as well. Jobs on the jobs front, if commentators and central bankers are right, he could be a bit of a strange one, maybe coming down quite a bit, but then also layoffs down a bit because most of the people say now that the job market is pretty flat right now. There's no hirings, no firings. So, but as we saw, there are a bit of firings. Will it show up? I don't know, but it could turn out to be like one of those reports that doesn't look good because both sides, hiring and firings, are absolutely showing no pulse.
Yeah, it could be. Yeah, but the thing is, it can't. I've been saying this for a while now. Particularly with this shutdown now, it can't go on for too long. If
No.
government contracts are being halted, and you're now 3 months. You had a big government contract, and you're 3 months, and you're not getting paid. You're not getting work. There's only one thing you can do really, and that's start letting people go. So it is a slow burning fuse, shall we say? And we might just start to see some of the beginnings of that. But who knows? I still think that a lot of people expect when this shutdown ends, obviously depending on when it ends, that the US will see a marked bounce back. But I'm not so sure because while the economy has been doing well, the jobs market has been softening even before the shutdown. And I'm a bit skeptical about how much of a bounce we'll see in the US. But anyway, we won't know until we do get to the end of the shutdown. So how long's a piece of string? Right. Anyway, let's have a look around. Ali, how many times do we tell you not to put your orders on your levels? If you had 140 in dollar CAD as a level, why are you putting it bang on 140? You should be ahead of it. Don't be a dick for a tick, as we say in this business. That's why we place our orders ahead of things. You can't win them all. I missed out last week. I had a bid. What did we get to? 88. I had a bid at 75 on this dollar CAD last week. Just it was above this level that I was looking at after the BOC. So I missed out by whatever 13 pips on a trade that's gone all the way back up there. So even when you do go ahead, sometimes you don't get it. But yeah, and chasing, I wouldn't chase it up here. Most certainly, what you may want to look for is potentially a break up through here. Maybe you could take a break trade above 65, 70s, but there is a lot of traffic into the 141. So you're probably better off waiting for a dip. We have moved finally above this 140 30s area that had been capping for the last couple of weeks. So we're above there. So if you see a hold on that 140 30s, 25 30, that's maybe where you want to look to add a little one, but maybe keep it pretty tight in case we fail once again. But yeah, it's very, very difficult chasing dollar CAD at the moment. I think if you get one headline saying that Trump's ready to talk, we could see a bit of a reversal, but the dollar's looking strong elsewhere. So that stays in the mix with this one. So yeah, we've had a decent recovery from all the moves last week, but we're back in this traffic area that we've been playing around with for quite some time. And quite significant that right after the breakdown under that big level, 39.78, we're holding it as support again. So pick your points, Ali. Pick your points. Mike, what do we want to look at? A quick look at Aussie dollar. This one's been messing around the zone. I think we're sort of a bit in middle ground here at the moment. Use this zone as a bit of a pivot level. As I said, with the RBA, if you're about and you see a decent spike higher, 30, 40, 50 pips on an unchanged headline, and the US dollar is still strong against everything else, then you're probably going to see the market hitting that sort of rally back down to this area. Can it break lower? Gold's holding up a bit as well, so things are still okay on that front. Where do you see this one, Kay? We're a bit sort of in the middle at the moment.
Yeah, putting up a bit of a fight around that 65, 30, 40 zone, which is a level, and geez, it looks ahead of the RBA. But then, as we were saying earlier in the show, it's kind of depending also on what the dollar does when the US walks in. It's the dollar is a little bit just because of the tightness, maybe, or the tightening of the financial conditions. I'm not going to do anything with it because, I mean, as I said, the RBA is such a known thing right now. If you look at the interest rates, really 360 on the Aussie, 3.75, 4% on the US. No difference over there. Very little in the open market as well. Yeah, you can trade the level, but then if you buy at 30, where's your stop? You can either put it like extremely tight because there was this 65, 20, 25 where we banged our head against before we moved higher, just earlier in October. To put it right really tight, just around 15 or so, or otherwise, if you don't put it there, then the question is where's your risk, and that's probably going to be not before 64, 75, 80. So it all depends how deep the pockets are if you want to what kind of risk you want to put in it. But if you think that the dollar is going to turn around, of course, I mean, everybody does what everybody once, obviously, the dollar could turn around on a dime as well, as we have already been talking about earlier on the show, and Ryan was mentioning about all those data coming out and those job numbers in there. If they show a worse picture, it's probably going to turn around. But when is that going to turn around? You could actually argue to wait today to see the ISM manufacturing numbers, and if they show a weak picture, then maybe you can put that in together with the expected RBA and justify your purchase of the Aussie.
Yeah,
That's a possibility if you look at some data to support your idea. Yeah. For the time
yeah,
being, I'm leaving it alone. I I still think that Aussie may be one of the better currencies if the dollar turns around, but for the time being, I'm not too sure about stuff. The dollar is really keeping a pretty big tone.
yeah. And this one might just be holding up because we got the RBA, and if we get
Exactly.
over that hump, and then you see it coming back down. As far as your level, Mike, 65 30s. Yeah, we got a bit of support into that area. 30s is bottom of my zone at 36, just some lows and highs there. But like Kay says, how much risk do you want to give it? Do you give it down to 10, 15? Do you give it down to the figure 64 80? There's lots of little levels. So yeah, particularly with the RBA, if you're getting in a trade before that, then you're going to be looking, I think, to probably just scout around and do a bit of sniping.
And the problem is that if she says something wrong, you see a 30 points, 30 pips deep, and then you're back at the level where you left it before. So
Yeah,
I think it's a bit of a rough play to well, for me at least. I'm not tempted to get into that one right now.
no, I think, Mike, if you're going for a quick snipe, you've got to you've got to have taken some money before the RBA. Otherwise, you're just letting it spin on the wheel. Really, I think. Unless you've got a longer term plan where it doesn't matter what the RBA does, but that's down to you, mate. Dimmy's asking about euro sterling. Oh, it's going to the right one. Yeah, a little bit of sagginess. What any reason behind this one, Kay?
More sellers than buyers, take profiters. I think maybe a little bit end of month stuff as well, because it was we saw cable rally a bit into the fixings over the month. And no, well, you know, we've traded the expectations, started to trade the expectations for the budget. Now I think we are for the next 4 days, 5 days, maybe just a day after as well. Going to trade the BOE before we trade the budget again. Market's a bit maybe short-sighted on this one. I was pretty happy to let a big part of my ads go on the euro sterling above 88. Now I'm just base long, but it's buying time is perhaps the best I can say. I mean, the issue with euro sterling is that you got ECB at 2% and the Bank of England at 4%, and it's the inverse problem that we already spoke about in that you have in the yen. How long can you be short sterling against a lower yielder? You have to take profits at some point, and I guess that's kind of what we are seeing right now. And then, yeah, we will probably see after the Bank of England. I fail to see anything positive coming out of the budget for investors for right now.
Yeah,
So I can really only think about this is pre-BOE, and I wouldn't, as I said on the morning updates in our room, I wouldn't even exclude a bit of a stop run under 87.5. But if you bring it closer to 87, 86, 80, I'm going to add again.
yeah. I may even look at that 87.20 level.
Mm,
That's been a real monster of a
yeah.
pivot point recently. But yeah, again, Dimmy, yeah, 85, 87.50. It's the break point down here, so we haven't really retested it. Again, you've got to think about the risk. If you take along there going into the BOE, if you have 10, 15 pips in profit, what do you do? Are you going to let it ride, or are you going to take some money? And you've got to manage it well enough when you're trading short term with all these events going on. But Yeah, I mean, I've seen nothing but, sitting down this morning, nothing but budget headlines going through. So I think we're at the peak headline saturation at the moment, and now it's going to be really the only saving grace. I've been saying it for a while is whether her announcement isn't as bad. I don't think anything of it's going to be good, but whether it's not as bad as what everyone is expecting, and then that could see a bit of a pound rally, but that's not till
Mm.
the end of the month. And as I say, Bank of England is way before that. So yeah, I agree with Kay that some of this sell off just might be a bit of squaring up while we're sitting treading water. You don't want to be paying the costs, or some people won't want to be paying the costs for 3-4 days when you can square up and get back in afterwards. So yeah, right, okay. I'm going to pass that over to you,
Sure.
Mr. Kenny.
And hi, Matt. Thanks for asking. I'm straight away going to have a look at dollar Norway because let me put on the chat again to see if other people are asking something. I don't like it in the short term that we are back above 10.05, 10.06. I mean, I don't like it. I don't like it for to trade this on the shorter side. I've been looking actually to trade this on the shorter side, but I've let it go. When we went back above 10 here, I tried to play it short a couple of times. One did work, the other one not really. But I don't like this fact that we are back above 10.05, 10.06 for those who want to play it short. If you want to play it on the long side, this is your first level that on any return lower now should be holding. And then of course you have that zone here of, yeah, we traded below a number of times, but I would still say this 997, 997 and a half is going to be the confirmation if we get back below to for it to trade lower. But the dollar for now is, first of all, is the dollar pushing higher a little bit. We're coming from highs on the S&P and equities, and have been trading a bit back lower, back into the bit lower levels. We know that Scandis trade a bit of risk as well. We are seeing the oils, they always try to move up and then find resistance. So for the Norwegian kroner, we are especially looking at Brent. So we saw this uptick, but again, it's not really lasting. Norwegian kroner will need this one and European gas prices to trade higher to really strengthen. And I think in the longer term, I'm not giving it up. I still think that what we started here will find some extension sooner or later, but it just may be later, especially now as well. We're talking about those a bit tighter conditions in the US as well. It's all helping the dollar right now. We're seeing it on all currency pairs basically. So as well on the euro Noki, on the dollar Norway, and yeah, for the time being, I'm leaving it alone. 1016 is your next resistance. So somewhere we are around what, 1012 right now. Yeah, 1005, 1016 or so. Because we had some traffic around here too, but I'm not really inclined to pay up for it. For sure not. I'm not inclined to pay up. But I wouldn't rule it out, that before the whole thing is over, that we see maybe a full retracement of this one back up to 1020 or so. So for the time being, unless we go back below 1005, 1004, I'm not going to be interested in pushing it or trying to push it lower. Now, if you're on the other side, it's a good support. Yeah. Um, yeah, Euro Aussie. And that's we need to look at a few of the crosses. Euro Aussie is trying to push through this level here. Let me just go on a slightly longer term picture. We're running into decent support, not too far from where we are. Okay, this whole thing, you see like several lines here. Also, bit of a support line here. 175 low 175s, 175.40. 175.50. That should be showing up as a support. But again, Joao, are you taking a position ahead of the RBA? I don't know really what to do with it now. I'm The only thing is that I got like, having a bit of a feeling of missing one out here, because I really thought that Aussie would be one of the currencies that would hold better, but right here and now I wouldn't chase it lower anyway. And if you're looking for resistance, 176 three quarters before a bigger traffic zone. Okay, 176 three quarters. All right. Risk on off. Yeah, risk on and off. But has risk been on or risk been off? If you look at it from the equity side, we are still on long-term, very long-term highs. But um, if you look at gold, for instance, which is still up at 4K, it's probably not telling us that it's risk on right now. I think you really have to take some really the separate currency, and where I think that the Aussie could still come out of this whole story on the better side of things is that they escaped the worst of the tariffs, and the setback that we have seen on the Aussie after the Trump G meeting may also have run its course. So I'm still relatively in the longer term positive on the Aussie, but not really linked straight to risk on, risk off. Okay, if you look at the the yen side of things, we're turning around this 154.15. I'm quite surprised that the market hasn't tried to push on with it on the day that Japan was out and the dollar is doing better. Why didn't we push higher? I haven't seen any specific more verbal warnings than we had already on Friday morning from the Japanese officials. So okay, we're stabilizing here in the yen crosses. Still no reason to me to be long yen on the on the global side of things. I'm actually looking at any setback here, whether it be dollar yen or maybe even euro yen or so. Give me something around 176 three quarters, and I'm going to get interested again. Okay. What else are we looking at today, guys? Liz, cat Swiss long. I'm not going to look at the chart, but just wonder why you would be long Canada. I understand the short Swiss side of things. Why would you be long Canada? It's a it may be a good question to ask yourself. There's not really a lot of positives coming out of Canada right now. But if you see a better jobs picture there on Friday, maybe the Canadian side will take over again. I'm quite still looking myself at the other side of the Canada. So if you ask me about Cat Swiss, and unless Ryan, you have any other idea, I think both currencies are in. For what are the FX moves are concerned, they have different sensibility, of course, on the fundamental side, but they both look to be on the same side of the coin for me. Um, Gold still in the wedge. I was a bit surprised actually that we wouldn't find gold a bit lower, because the Chinese have gotten rid of a tax break that was in place for a long time for retail sales sell sales to retail for gold. And I thought gold would have been trading a bit lower, but it only traded lower very briefly. So we're still inside the wedge for the time being. I think relatively neutral. We know where the big breaks are. 38.5 to 38.90, and on the other side 41.1030, and we are inside here and we're holding around 4K. So it is still doing a job as a hedge in the meantime, and maybe look to the shutdown, look to maybe tightness coming into the US, but not being liked by investors. So it's still fulfilling its role as a hedge against things that can go wrong. I'm not tempted to do anything between 40.60 and 39.60 and add 39.40, 45 to the frame. Not really tempted to do much inside of this right now, unless you want to play those edges of the wedge here, of course. Okay, and same thing in silver, playing ping pong on the top end of the table right now, before above 48, above 47 and a half. But we are not breaking the break zones 49.80, 50.20, and 45.40 to 45.90. That's the biggest zone that we are watching here, and inside it's moving up and down, but also worth noting that we are moving up and down in the upper half of the of that bigger range. Okay, so that's still the interesting thing about what's going on in silver. Adi, I'm with you. I actually bought it this morning, the Euro cat, looking at it from a more um, medium term side, maybe perhaps, or I mean, it's not. Whoops, where my chart gone? Thank you. What happened here? Okay. Um, I'm saying medium term because a lot of day traders will find it a little bit wide, but I'm looking at this here, and I'm also still looking at potential weakness in the Canadian dollar. And yeah, the euro dollar is coming down, but a I'm not a euro seller on the crosses, and so I think this one is going to find support sooner or later, whether it be around 161 15 20 already, or do we have to wait around 63 60 60 63 quarters? It's possible, but I've started this morning, but I'm going to try and build into a bit of a position here. It goes back above 162 40 50. I think we're back off to the races. That's the simple view I can give you right now on this one. Um, and that's about it for me right now. Euro dollar is into a support zone, but I don't know what the Americans will do with their own dollar. We're into support here. Possible that we get an extension down to 114 and a half if we break under the 115, bit of a psychological level there. But I would argue that taking into account what everything we spoke about on the flow show today regarding the dollar, the shutdown, the rates, the repo market, and whatever, it could equally go for a quick run and then completely reverse. So I'm not looking, if even if we trade below 115, I'm not looking at it as being a potential long-term break yet. I don't know what you think about that, Ryan, to close our today's show about the euro dollar if we break below 115 at some point.
Yeah, I mean, we did it before, didn't we? Earlier this year. I was looking at the 115 level for a little tap, but I don't know. It's looking very heavy at the moment.
Yeah,
Very heavy at the moment. So
it's heavy, but do you think it could be a long-term break? Because I hear people talking about 112, even 110 or so, but this one here, do you think it could be a more medium-term break if we get below 115, or is it just one of those?
yeah, I don't know. I mean, yeah, it shouldn't fall
Anyway,
out of bed. I think if it breaks 115, it can certainly go and test that 114 and the prior lows. I think it might be a bit of a dribble lower. But yeah, I can't see it being a big, massive break unless, shutdown ends and the US economy does take off again. The Eurozone economy, you still don't buy the euro on the back of the euro economy.
mm,
That's as plain as a nose on our faces.
mm,
But yeah, it's as I said, we get the data this week and it's not looking good in the jobs front. We could be back up to 116 pretty quickly.
yeah, absolutely.
Just one of those. So 115 is a big enough level. I've still got my eye on it. I still
Mm,
might try just a little nibble in there. Maybe stick a stop below 114.50, give it a bit of room, and see what
mm,
happens.
yeah, okay. Yeah, me too, mate. I don't think I'm not in that frame of mind. We're saying like, oh, if we trade below 150 to 15, that's it. We are going down to 110. I
Yeah,
can't really right now. Um, yeah. Okay.
yeah.
Alrighty, back over to you, mate.
Thanks, mate. Thanks, everybody, for coming to the Flow Show. Got you all set up for the week ahead, I hope, but we'll keep you company throughout the whole week, as always. So have a great day, have a great week, and we'll see you all tomorrow.